Hello, this is Rich Canleone coming to you from the CME Group trading floor. Happy Wednesday. Today's segment is The Market Breathes a Sigh of Relief. Obviously, we're all watching the news and we've seen that Greece is good. If you believe that, obviously we still have to wait for this other issue on Thursday. However, the market is now looking forward, so putting Greece aside, we're starting to breathe a sigh of relief. Pending home sales this morning, actually much more positive than the survey anticipated. So in light of that, I think the shorts that we've seen in the market on the sell-off, going back on a much larger level, all the way back to when we even saw the whole issue with Japan. Now we see that Japan is coming back online. Greece austerity is now negative. Part of it is starting to be priced out of the market. We're holding the 200-day moving average in the SPX, the futures as well. So let's talk technicals, if you will. What that means overall, you've gotten the bounce off the 200-day moving average. You're getting negative open interest out of the market. In fact, let's talk about open interest for a moment or two. We have had a minus 64,000 mini S&Ps come out of the market since Monday. What that means, believe it or not, in notional value, real money, is approximately $4.2 billion that got in on the short side. Let's not forget some of it might have been put into on the short side when we first saw, and started to realize that Japan started to not look that good and be offline. But most of it was put on when we saw the whole Greece thing come about. That is coming out. What that means is that that's going to fuel some technical levels, because as you buy and you create some momentum, the high-frequency trading stuff will start to take over. And don't forget, you're in the end of the month, end of the quarter time frame. And let's not forget with that as well, you have non-farm payrolls right around the corner. So technical levels that you should be looking at. You have a serious trend line that comes in from the area that we just stopped at this morning in the cash, roughly 1305, 1306 area. We close above that line, and my guess would be that you're looking at a retracement to the Bin Laden capture highs, 1373 and change, if you will. At any rate, just to throw some averages at you, 100-day moving average, 1316. I think that will be eventually transcended. The 8-day moving average that I like to look at, and my friend Timmy likes to look at as well, is holding up quite strongly in the cash S&P and in the futures. A little bit wider in the futures, obviously, on a continuation basis, 1286, if you will. I know I'm throwing a lot of numbers at you, but I think at this point, since we've gotten all the fundamental stuff out of the way and we're starting to tiptoe back into the warmth of good economic releases and the austerity program being passed and Japan coming online, this market is going to trade technically, significantly technically. So you have the 100-day moving average that comes in just up above at 1313. I think you will close the week up above that. Additionally, you have a large trend line that comes in from the Bin Laden capture, which is 1373 and change, and that, believe it or not, connects today at 1292 and a quarter. So a lot of levels to look at. Trade it smartly. I would use those specific levels to get long and play the market for a pretty decent rally going into the quarter end. Rich Canleone from the CME Group trading floor, signing off. Thank you.